Yeah, I agree. Someone says, how does the banking side fundamentals, student loans, private loans, mortgages compare to other similar banks? We would be worse compared to other banks, but that's just because we're much smaller, I'm assuming.
Well, in terms of growth rate per product, like this is another thing too, which I don't like some people whenever they say like, oh, I prefer to own, this stock that's growing at 0% versus this stock that's growing at, 60%, but it's riskier. It's like, yeah, but you're buying on the what's the percentage of chance? What are people betting on the upside of the company? Right? This is like Tesla at its heyday. It was all euphoria, 100% chance of success. Stock went into the trillion-dollar market caps. Optimus robot's going to be great, all these sorts of things. And then you start to actually price in, you see this robot on stage and you're like, okay, well, that doesn't look like it's ready to be in my house yet. And then people start to get a little bit less, excited. The actual total, car space, they're losing the demand and everything like this. I mean, I'm talking about a different stock, but, things can change about the optimism about a company. What I think is important is that we're looking at this stock on a day-to-day basis, but the information that we're getting from the stock is not day-to-day. We're only getting it quarterly. And every single quarter, don't forget, these were our expectations. Analyst expectations were lower than what actually came out. That means we were getting triple beats, which is what it was, quarter over quarter over quarter. Meaning, here's your expectations, we beat it. Here's your expectations, we beat it. Here's your expectation, you get the picture, right? So if you're actually looking forward, like I said again, what is the likelihood that we are going to beat it? What are the signs showing that next quarter we are going to miss on revenue? We're going to miss on member growth. We're going to miss on these things. I don't see them.
Yeah, I think we triple beat every single quarter so far this year, or at least on a trailing 12-month basis we have.
Yeah, or met. We've never missed. We've never ever missed.
Has there been any product or metric that hasn't grown at a substantial rate? I mean, I looked in your chart; it was pretty much all triple digits across most products.
Yeah,
the lending products.
Yeah, student loans didn't do well. That's pretty much it. Here, let me just show you it again really quick. I don't know why I can't zoom. Oh, maybe that's too much. Yeah, so that's the products from that entire thing. I have, every single quarter here, so we can go through and look at every single quarter of growth. I could probably make that smaller, or maybe this is for another day, but it has been very, very substantial. I want to get rid of that now, but yeah, so we are growing in all these products. This is the base of our company. It's why it's the first slide on our pitch deck, right? It's where's our monetizable users, and is that even a metric? Like, banks are not growing in deposits. We are growing and taking total market share in deposits and these sorts of things, which is a great metric to show off monthly active users, because where you're using your direct deposit is most likely your primary bank, right? Primary banks make 10x the money than that a bank that's just looking for, I don't know, for you to use one of their products, which is a case that can definitely happen. I bank with a lot of banks just for their credit card and these sorts of things. But, what I like a lot about SoFi, and what Anthony Noto's even seeing too, and maybe we should bring that back up, is the amount of purchases that he's making. Unlike, everyone goes Asana, right? That's the company that Dustin Moskovitz, I can't say his name, that he owns. The guy has like $11 billion, for him to purchase a $1 million share in his company is not the biggest sign as to Anthony Noto pouring like a quarter of his entire net worth into one company. You think he's throwing that into a shit co? Sorry about that. Maybe I should bleep myself out, but
that's so cool. That's dope.
Yeah. So I don't know. Yeah, it's also funny too, if I could speak on this really quick, is just the idea of whenever Tesla is at an all-time high and you're even seeing a bunch of new investors that didn't make any money on Tesla and everything like this, Elon Musk is the cat's pajamas, That's another old saying. So we can add that to the list. Everyone's excited whenever everyone's making money. And then whenever the stock is going down, these are your worst enemies. Change out the CEO, do all these things, even though, we're going exactly where the fintech market is going as well. We're not underperforming in terms of our competitors at all. Like, so I don't know. I'd love to hear what you guys have to say.
I'm just looking at the chat. There's like a lot of back and forth around like buyout conversations. And that's like a tantalizing topic to talk about, just because it goes along with like a lot of the arguments that we're making with the stock being as cheap as it is. Institutions are also seeing that as well. And a lot of these big financial institutions are big holders of SOFI as well. And it's definitely something that for 2023, maybe we want to jump into Bender's points. A lot of those are sort of product focused, but there is a possibility, I would say a heightened possibility of a buyout in 2023 relative to 2022, as in there's more of a chance because, we're down 80% on our valuation since 2020.
That's the same in any sort of depressed market. In a bear market, it's merger and acquisition, baby. Like it's time to scoop up the people that were undersold, right? Yeah. And if you did buy during IPO time, that sucks. It does. If you're buying today, that's not a bad thing. Well, not if it happens further down the line, if we're at like $2 a share or whatever. But if today we get a buyout offer, the people who bought today are going to be very, very happy campers. I guarantee you that. And stocks don't get bought out for the price that they are. There has to be a large premium for that purchase for everyone to sign off on it, for the board of directors to say, okay, as a fiduciary duty, this is the good thing to do for our company. But there's also an argument to be made for Anthony Noto and the board of directors to say, you know what, we were overpriced whenever we first came out. We're underpriced now. And actually, we decline these sorts of offers. We've been, we've had a buyout offer way back in like 2017, I think I remember, for $6 billion, more than we are today. Back in 2017, think of the growth rates that I just showed you guys for 2 years ago. Imagine 5 years ago, when we didn't even have a financial services segment, whenever we were just a student loan company for $6 billion before the pandemic, before all those valuations.
And who offered that?
I think it was an Indian company. I'm really on memory here, so I'll try to find the article for you guys. Maybe I can tweet it out afterwards. So make sure you guys are following me.
That's a good plug. It's a good plug. Oh, I think I found it right. It's well, I found the article. It's just loading. It's from oh, it says Schwab tried to buy them.
I mean, this is only a rumor, so it's unsubstantiated, but I think there was a rumor at some point in 2021 or early like 2020 that Goldman tried to also make an offer for something like 9 or 10 billion. But I think that Noto's stance has been pretty clear on the buyout, where he just feels that the inherent value of the ecosystem is much more than anybody would pay today. I mean, I think a buyout today, something like 15 billion wouldn't be out of the question, which is like, a 3x or 4x, depending on, where we end up from these levels. But I don't know that Anthony Noto would take that. I don't think he would, quite frankly. But it would probably be one of the bigger banks. Like it would probably like JP Morgan or Goldman would probably be my guess, especially because Noto also has the Goldman connection there as well.
Right. We only have a little bit of time left. I'd like to take 2 more topics just really quickly. I'd like to talk about insider buying really quick. And then let's talk about, Bender 9000's future predictions. I'll just do this really quick. I'm making a future video. It's going to be on the market effects of insider buying, like market wide. Okay. Whenever insiders, directors of the company, high up directors start buying the companies, it's a okay metric to know that we are at the bottom of the market. And I'll show you guys sources, but you'll have to check out my video for that. But whenever we're actually talking about top executives, CFO, CEO, purchasing companies over and over, there are metrics globally, okay, showing that as we start to see increases of insider buying globally, that these are like some of the highest metrics for spotting the bottom of the market. It's why people pay attention to insider buying. especially with the people that know most about the companies. Now, I will show you guys, like I said, but you guys should look at Market Beat and actually find out insider buying that's happening across the board. December is a massive month for CEOs, CFOs across the board buying companies. Okay. And now I think hopefully if we keep staying depressed, maybe January, February, it even increases even more. Oh, lost a minute.
I'm here. I'm here. The camera just changed. I'm here.
Got you. Okay. But yeah, very, very exciting. I want to talk about that more. But Noto is ahead of the game in the way that he is buying this company, and like crazy. A lot of money is going into this company. I think that paints a bigger picture than people give it credit for. Let's jump into just the last topic of the day, and an exciting one. Bender's, predictions for 2023. Hopefully he gets 70% of them right again. Boom. You guys got me?
We got you.
All right. This is Bender 9000, the 23 potential catalysts for SOFI in 2023. Big wins for the tech platform. He talks about, getting large financial institutions as clients. What do you guys think about that?
I mean,
you think it's a possibility?
He mentioned that it's a city conference as well. That like that quote from November is in the city conference where he's basically like, "Hey, we have some people that we're talking to." I think the main thing right now is that the way that Noto is seeing it, it's a matter of when, not if, for these big legacy players.
Yeah. Galileo products. Now, these are the products that we've recently released. Direct deposit switch, pay in 4, fleet cards, dispute APIs, enhancements in the payment risk platform. I think that's with DataVisor, leading partner that we have for risk management. The upcoming products that Bender believes are coming, and this is in the roadmap: rewards programs, credit card programs, lantern style referrals. It's like insurance and loans. All massive products. So if this gets launched, this is bigger than we think. I mean, rewards could be massive if that's launched, for example, in the same way that Robinhood, one of our clients, if they do a rewards program, that could be absolutely massive for their type of audience, right? A younger audience, sort of build points. You can buy stocks with those points, use the card more. And then in the end, that comes back to SOFI because, those are our clients through their cash card. Anything on that, guys?
Yeah, I kind of want to circle back to that rewards point as well, because again, I think it links into the ecosystem of the cross-selling with the shopping side as well, which was another one of the suggestions. Basically, the idea is that they're going to have a wide diversification in the benefits of you being a direct deposit member or a SOFI Plus member in terms of what you can do with those, like what perks are available to you. And a lot of them will be B2B powered by Galileo, but as more and more are introduced from Galileo, like we saw with Buy Now, Pay Later, 2 weeks later, it becomes B2C SOFI branded content.
Right. And
I was just gonna say the Galileo products launching is one of the biggest reasons I'm excited, because that's why I invested in this company. So it'll be really cool to see them make progress. Yep.
Right. And maybe we'll you have Palantir tonight at 11?
11 to 5. Yep. We got a couple minutes.
Okay. I'll just do one more then. Maybe we can get this on next week, so you guys will have to come back. But lending segment. SOFI writes their own loans. They match addition. Actually, this is not a great. I don't want to. This doesn't really spark a lot of conversation. Retail CDs. How about this one? This is a great one. I love this. SOFI brokered CDs are a big hit. Brokered CDs help diversify funding, and retail CDs have a low cost of capital. Members are interested. Look for SOFI to directly offer retail CDs. I bet you there is a lot of people in the chat right now who have CDs, and it's a great product, especially in this market. SOFI doesn't offer it right now. That could be absolutely amazing. I think that we kind of really need that to be a one-stop shop.
Yeah. That would be interesting if they actually offer retail CDs. What's the percentage chance you put on that?
I mean, nearly 100. Now that we're a bank, it's a great product. Everyone wants it. And I'm sure it's not that hard to implement considering some of the other products that we offer.
Okay.
Like, here, let me drop this for a sec. I think people forget how fast to innovate SoFi was, especially during the pandemic. That's no difference. We're just dealing with a lot bigger challenges. And I'll leave it there. Yeah, hopefully you guys have something to say.
Yeah, all I have to say just to wrap, my segment up is like, I made similarly, to a lot of the charts that Tannor put up. I did, some introspection on what did 2022 bring for SoFi, and I just summarized it all into this big Twitter thread. And I would suggest
Good
that
thread.
if you're interested, take a look at it, because it will help you, like, not even for the individual points themselves, but just looking holistically, it will help you understand the rate of innovation at this company and the rate of new product introductions and how they're thinking about this whole ecosystem effect. It's very, difficult when the entire sort of stock is down over 70%. But when you see that every single month there is 1, 2, 3, new products that are launching consistently every single month, then you start to decouple those ideas of saying, well, this is a stock that's down 70%. I'm very emotional about it, with this is a company that's consistently executing and innovating, and I should be very excited about it. So that's all I'll sort of have to say. And I think that, similarly in 2023, we can see, something for like similar rate of innovation or rate of new product launches, if not accelerated in 2023, because these things happen exponentially.